Bitcoin's corporate accumulation faces a surprising slowdown. Could this be the reason the bull run hit a wall in August? For the first time, major companies collectively held over 1 million BTC, yet their pace of buying leveled off dramatically just as Bitcoin's price surge lost steam. But here's where it gets controversial. Some observers argue corporate buyers have become unexpectedly cautious, and that this reticence might be stalling wider market momentum. According to the freshest data from the Bitcoin Treasury's adoption report, entities managing BTC treasuries acquired 47,718 new coins last month, valued at $5.2 billion. This sounds impressive until you note that July's figure was more than double, clearing over 100,000 BTC added. Public companies, private businesses, governments, and ETFs together now hold about 3.68 million BTC, worth a staggering $400 billion at August's close. Yet August's monthly increase in holdings was only 1.2%, compared to July's robust 4.6% upswing. And this is the part most people miss. The market's pause came even as several headline-grabbing fundraising events promised aggressive new commitments. Treasury-rich companies like Strategy, NSTR, KindlyMD and Metaplanet announced intentions to raise over $15 billion in equity to boost their Bitcoin treasuries. But so far, these bold fundraising plans haven't produced immediate, tangible purchases, fueling debate about whether the gap between media headlines and real market impact is growing. Does this reveal corporate fear or just strategic patience? Even so, August did bring milestone achievements. Public companies finally crossed the landmark of 1 million BTC in total holdings, a figure that has doubled since late 2024. Dive deeper, and you'll see some big individual plays. Healthcare firm KindlyMD made the month's second-largest acquisition, snapping up 5,744 BTC, worth $679 million. Metaplanet, operating out of Japan, executed 4 Bitcoin buys, totaling 1,859 BTC. Meanwhile, crypto exchange Bullish, BLSH, entered the Treasury leaderboard soon after its August IPO. It's been quietly holding 24,000 BTC since March, showing a value of $2.6 billion by month-end. CEO Tom Farley calls this the crest of an institutional wave, telling CNBC it feels like institutional investors think this could be the moment. But here's the twist. Despite these headline moves and growing treasuries, the total value of tracked BTC holdings actually declined in August, from $428 billion down to $400 billion, as the price cooled to $108,695. Is the market just catching its breath, or is this the beginning of a broader shift? And for those who follow macro trends, another provocative perspective comes from BitMEX co-founder Arthur Hayes. In a recent interview, Hayes made waves, suggesting that continued government money printing, especially under Trump-era fiscal policies, could extend the crypto bull cycle well into 2026. He boldly claimed Bitcoin can outshine traditional investments like stocks, real estate, and gold, particularly when accounting for currency devaluation. Hayes also challenged the tendency for short-term impatience, urging investors to evaluate Bitcoin over longer, multi-year periods. So what do you think? Is the apparent slowdown in corporate Bitcoin buying just a temporary blip, or does it signal deeper caution among big institutional players? Will ambitious Treasury fundraising translate to market action, or are we heading for a longer period of hesitation? And can Hayes' forecast that endless money printing will extend the crypto rally really hold true? Add your perspective in the comments. Do you agree, or sense the signs of a brewing disagreement in the air?